Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments.
Likewise, so we have a lot of money coming in and we have no inflation, and we're very strong, and we should be lowering the rates. You know, each point that this gentleman keeps up costs us $365 billion a year. Think of that. 1 point, $365 billion. If you bring it down a point, we save 365. We should be the lowest interest rate, and we're not. We're 38, number 38, because of the Fed. It's all because of the Fed. He's done a bad job. No, he's got
Ooh, Rumble, young man, Rumble. This is go get good, y'all. Let's get into this one.
We on now. They respect us cause we on now. Money up, run a whole town, don't we? This power money can't slow down. Money won't slow down. Ooh, we doing a lot. How we got on. Why they party? I'm in here grinding. Money I'm stacking. Why they rock diamonds? I can't relate to them, ain't my shit common. I set a goal for me, 2 or 3 commas. 7 figures, 8 figures to 9 figures. On a slow pace to get rich quick. Same time we just think different. Cause when you make it, it hit different.
What it do, y'all? It's your partner Dale back in the saddle again for another edition of the Counter Move podcast. Every single Thursday at 8:30 p.m. CST. You come kick it with your partner, man. Man, you know I look better than you. It's all good, baby. Do me a favor, guys. If you could, guys, like, share, and subscribe, guys. And if you could, there's a little bell on any platform that you're actually on. Click on that little bell so when your partner comes live, you get to come kick it with your mans and them, man. So, but man, thank you so much for your time, guys. So bless me with your time. Let's dive into what's going down here, guys. Man, it has been a very, very, very eventful week, guys, specifically between the Fed and the President of the United States, or the executive branch. It's been a very busy week. So here's going to be our topics for today, guys. All right. Boom. Here we go. The Fed holds the line. As of, I believe, today or yesterday, the Fed chairman came out and announced that they have made the decision to not cut the rates, but for them to remain the same. All right. This is like the second or third time he's done this. Number 2, Trump fires back at the Fed and says that what they're doing is ruining or harming the economy. Right. Number 3, for Americans. Number 3, we're going to hear about conservative voices respond. Independent voices are going to respond to this news with facts. And also, we're going to look at the liberal media is going to react as well. Some are upset about what Powell is doing. Some are happy about it, to be honest with you. So we're going to look at all of that through the lens of facts. And we got 2 more special ones. I'm going to give you my response to the strategy behind what's really going down with this non-rate cut, and Also, President Donald Trump's a counter move to this action. There's two counter moves he's doing, guys. You're going to hear the first one up front and then the last one at the end. The last one is the biggest one because it's going to help you out the most, guys. All right. Let's dive into this thing real quickly, guys. All right. All right, here we go. I want you guys to understand something real fast. You see this here: strategy, capital, and impact. Remember those three things: strategy, capital, and impact. I want you guys to burn it on your brain as I'm going through this. All right. The first one. All right. The Fed holds the line. Why Powell refuses to cut the rates, and he ain't budging at all, guys. So what we had to do is we had to bring in, we had to allow for him to come in, guys. Let's go to hear him directly from him of the reasons why he and the Fed board decided not to cut the rates again. All right, let's dive into this real quickly. Here we go, guys. Let's get in this real quickly. All right, here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Despite elevated uncertainty, the economy is in a solid position. The unemployment rate remains low, and the labor market is at or near maximum employment. Inflation has been running somewhat above our 2% longer run objective. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged. We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments. I will have more to say about monetary policy after briefly reviewing economic developments.
So now we just heard him talk about what's going on with the economy, how it's doing fairly well, and then based on some unforeseen details that they thought it would be wise for them to not change the rate and for it to remain the same. And he's going to unpack the why he refused to cut the rates. Listen clearly. Here we go.
Recent indicators suggest that growth of economic activity has moderated. GDP rose at a 1.2% pace in the first half of this year, down from 2.5% last year. Although the increase in the second quarter was stronger at 3%, focusing on the first half of the year helps smooth through the volatility in the quarterly figures related to the unusual swings in net exports. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles picked up from last year's pace. Activity in the housing sector remains weak. In the labor market, conditions have remained solid. Payroll job gains averaged 150,000 per month over the past 3 months. The unemployment rate at 4.1% remains low and has stayed in a narrow range over the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in June, and that, excluding the volatile food and energy categories, core PCE prices rose 2.7%. These readings are little changed from the beginning of the year, although the underlying composition of price changes has shifted.
So right there, he's kind of given a very healthy report on how the economy is doing. He had some concerns here and there, but they're very small concerns, right? I want to be honest, but he's given a pretty good report on the condition or the quality of the market. Let's get back to it.
Services inflation has continued to ease, while increased tariffs are pushing up prices in some categories of goods. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market-based and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal.
Okay.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5% and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks.
Okay.
Changes to government policies continue to evolve, and their effects on the economy remain uncertain. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation could be short-lived, reflecting a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed.
Right there is his whole decision-making variable concerning the interest rates for the nation is predicated just on one thing: tariffs. Tariffs. He has talked about tariffs of having some small inflation in some segments. He didn't announce what segments at all. He said some segments, and that's fine. That's fine. But from an overall standpoint, from what he's saying is inflation is down. It's not at the 2% mark, which I think is a pie in the sky type of mark to even try to announce. It make any damn sense at all. But it is what it is. What he is saying, he's saying, hey, the only thing that concerns me is tariffs. Now, this is what I had to kind of stop it right there for a brief second, because he goes on and on again about that. Now, watch this. I actually asked ChatGPT just now, right, while he was talking, how many times has the federal chairman came out and announced something concerning, right, the interest rates? It's 6 times. 6 times he's came out and made an announcement concerning the rates. The lion's share of the 6 times, right, have been no change to the rate. No change to the rate. Here are the dates: January 29th and 30th, 2025, he came out. March 19th and 20th, he came out. May 7th and 8th. June 18th and 19th. July 30th and 31st, which was yesterday and today. Upcoming, you have September 17th and 18th, November 5th and 6th, December 16th and 17th. So far in 2025, the Fed has made 5 official interest rate announcements, with the 6th released today, as of July 31st, 2025. 6 announcements. Now watch this, guys. How many of those announcements, all right? Announcements resulted in no rate cuts. All right. And I'm asking this question for a reason, and I'm going to get to it in a second. Here we go. All right. Now watch this. This is on ChatGPT live right here. It says all of the FOMC rate announcements so far in 2025 have been in decisions where the Fed held rates steady, not cut them. So out of all 6 announcements, all 6, the Fed has came out and said no cuts. Now watch this. When was the last time the Fed cut the rates? I'm asking for a question for a reason. I'm going somewhere. Here we go. It says the last time the Federal Reserve cut rates, right, was March 15th, 2020, during the emergency meeting in that. Okay, gotcha. So in 2020, it stated that he cut some rates. Let's see here. Actually, and held rates through. Okay, the last rate comes March 15, 2020. Cut them on 100 basis points, 1%, new range. Okay, gotcha. So Last rate cut was in okay. When was the last time Fed raised rates? Okay. It's important to give an entire picture here, guys. I want you guys to see what's going on here. I'm gonna make myself a little bigger. Here we go. Here we go. I want to let you that once you guys see what's going on. It says the last time the Federal Reserve raised the rates was July 26th, 2023. So that first sentence didn't make any damn sense. So it raised. Okay, gotcha. It rate hike 2020. Okay, gotcha. Okay. Did the Fed make any adjustments before the 2024 election to the rates? Here we go. Let's see here. Yes, the Federal Reserve did adjust interest rates in the months leading up to the November 2024 presidential election. All right. It says the FOMC, forgive me, decisions in 2024. September 18, 2024, cut by 50 basis points. That means half a percent. November the 7th, right before the election, it cut 25 basis points, which is 0.25%. You want you got the rates. So September 18th and November the 7th. So I'm confused, Mr. Fed Chairman. I'm confused by this. What information did you see that was better than you saw now that you made a decision to cut the rates twice before the election? And then 6 times you came out and made an announcement that there should be no rate change at all. And each and every time you've said that, it's been based on the possibility of tariffs and inflating prices. The first time, rocking with you. We on one. We on the same page, baby. The same page. The second one, third, fourth, fifth, and sixth, that's called time frames of data. And from an economic standpoint, tariffs have not had any inflationary effect at all. Matter of fact, it has driven out more investments by external companies, right, and external countries into America, right, open up more markets for us to actually send our products to. It's benefited the economy. You said so in your diatribe. So I gotta ask, what did he see that was better in September and November of 2024 that he doesn't see right now? That's my pushback a little bit on the Fed chairman. It's not making any sense. It's like he's literally saying, I believe, the keyword there is believe, that at some point tariffs are going to have inflation input. I don't know when, I don't know how, but I just believe it. What? Am I tripping? Like, this is asinine type of thinking. Again, facts, numbers. Inflation is down. Wages are up. Prices are down. I'm confused. Inflation was higher. It was high. Here we go, guys. Here we go. Let's look at this. What was the inflation rate on the last 2 rate cuts in September 2024 and November 2024? Let's see. ChatGPT it up, y'all. I'm gonna get to Trump in a second. Then, okay. Now get this, guys. September 2024 rate cut, right? September it's 18. 12-month inflation from September 2023 to September 2024 was 2.4%. Inflation, November 2023, 2024, 2.7%. We're there now, if not lower. I'm trying. I'm trying to let him make it. Right now, guys, the inflation rate right now is 2.7%. Now get this. November of 2024, what was the inflation rate? 2.7%. And he cut it by a quarter of a point. Do you see why people are saying that this is political? Are you seeing this? Things are better now than they were before, based on the same metrics. Again, data, facts, numbers. Right? Now, let's go over to President Trump. You know he had to respond to this, y'all. You know President Trump had to respond to this, man. You know he about that action, boss. He about that action. So let's go over to President Trump. He responds to this. Let me get to it real fast, guys. Where did it go? Likes. Okay, there we go. 1 second, guys. I had it up. Give me 1 second. And come on, where'd you go? Where did you go? Okay, y'all, I actually had it up, and it's just gone. Oh wow! I mean, it's literally gone. They take. Oh, there it is. Got it. Here we go. Here is President Trump responding. Now, full transparency. This was right before the Fed made the announcements. But listen to what President Trump said concerning what he thought was going to happen. All right, what he thought was going to happen. Let's go ahead and see what's going down with this, guys. Let's get it over here real quickly. Make it a little bigger for everybody in the back row. And let's listen to President Trump. Then I get my commentary on him. Here we go.
Likewise, so we have a lot of money coming in, and we have no inflation, and we're very strong, and we should be lowering the rates. You know, each point that this gentleman keeps up costs us $365 billion a year. Think of that. 1 point, $365 billion. If you bring it down a point, we save 365. We should be the lowest interest rate.
Agree.
And we're not. We're 38, number 38, because of the Fed. It's all because of the Fed. He's done a bad job. Now, he's got a meeting today, but I call him too late. You know, he's always too late. Even if he does it today, probably won't. I hear they're going to do it in September, not today. For what reason? Nobody knows. But Europe, as you know, cut their rates 11 times.
Wow.
In the last short period of time.
Wow.
But the good news is we're doing better than anybody anywhere in the world. Nobody's doing anything even close to us.
Wow, guys, that right there, guys, is something that other countries, he listed the country, has cut their rates 11 times. 11 times. And we've not had not one rate cut. And I'm trying to understand the reasoning why. It don't make no sense to me at all, to where when I'm hearing the Fed chairman talk, he's giving all of these raving reviews for what's for the economy, and then says, well, based on the tariffs and what they may do, we're going to hold steady. And President Trump said it best. We don't know why he's doing this. We don't know what he's reading at all. He basically said the same thing concerning what? The face rate is 2.7 when he cut it. It's 2.7 now. There's no inflation. He's right. So why did the Fed chairman cut it in 2024, November, right before the election, with the same inflation rate, a quarter of a point, and nothing here. Nothing here. What has been the inflation rate for each month in 2025? Add that question. I again, this is live and in person. I just want to see numbers, data, facts. I want to see this, guys. Okay, let's see here. Give me the rate. I want no plus. I want the rate. Give me the rate. I want no plus. Okay, early. Give me the actual inflation rate. Got it. Okay. Let's see here. I just want to see this live and in person, guys. Got it. Okay, here we go. Thank you, ChatGPT. Okay. Again, remember, President Trump came into office at the end of January the 20th. Right? Right? So that's how we got to do it. April. Now watch this, guys. April, the rate was 2.3%. No cut. 2.3%. Now, the Fed actually had a meeting, right? May 7th, 2025. That was the meeting. The first meeting, well, not the first, it was the second meeting because Trump had just gotten in office. So first one, I understood, no problem with it at all. Tariff play. And I even say May, I give you May because the tariff play. Unpredictable. I give it to you. Now we in June. Now watch it. Let's go back down. So June, guys, June. I'm reading this right here. It says May 2025, 2.4%. So he could have cut it then. So we're below 2.7. Because remember, in November, he cut it at 2.7. So in May of 2025, it's 2.4. Why didn't we cut? I give you the grace. Tariffs. I got you. No problem. June 2025, 2.7. Last month, 2.7. This month, 2.7. And during this time frame, they had 1, 2, 3 meetings. I'm calling May, June, and July. 3 meetings. Virtually no inflation, even with tariffs at play. And this Bama decided to do nothing. But in November 2024, right before the election, and in September of 2024, you cut the rates. Combined 0.75%. 3/4 of a point, basis point. I'm confused because the data says that you should have been cutting rates a long time ago based on your metrics. But in my opinion, you hiding behind tariffs. You're guessing. He's guessing, guys. He's guessing. The Fed is hurting America. I believe they are. I believe they are. I believe this is political. I believe it is because not based on what my opinion, the numbers say this. The numbers do. Okay, the numbers do. All right. Now, let's bring in some additional wise counsel. Hey, the conservative voice response, even the independents too. Is the Fed sabotaging growth? Well, let's bring in our old buddy Larry Kudlow, and Larry's going to give us some information here. And I actually like what he had to say because it made a lot of sense. So, Larry, brother, take us to the house. Let's go. Oh, 1 second. Hold on. 1 second. Here we go.
Interest rate decision. He just sat down. Host of Kudlow on Fox Business. Larry, that's okay.
Sorry.
You can keep taking notes.
He's doing the numbers here. Let him do the numbers here.
What is the headline from what the Federal Reserve just announced, other than the interest rates unchanged?
Voting against this action were Michelle W. Bowman and Christopher J. Waller, who preferred to lower the target rate for the Fed funds by 1/4 percentage point at this meeting.
Wow.
So that's pretty strong stuff. 2 dissents, first time since 1993.
Wow.
The last time, that's 30-something years ago.
Wow.
Somebody's math is better than mine. And in those days, it was Larry Lindsay and the late Wayne Angel, both dear friends of mine. Wayne Angel was a brilliant, brilliant guy. Sorely missed. But anyway, 2 dissents today. They want a 1/4 point cut instead. I want to read the directive. I just got off one show. We're going to head to another show. But that's important.
Yep.
Very important and extremely unusual. It's over 3 decades.
But what are they looking for? Sorry.
No,
good question.
Why, like what? I mean, I'm looking at the list of names here. We know, obviously, Jerome Powell, Austin Goolsby's in there. He was obviously a vote to keep interest rates unchanged. I mean, inflation has significantly come down. It's nearly at their 2% target, and the job market is strong. So what are they waiting for?
But that's a very good question.
Great question.
They're going to have openings on the Fed if you're interested in a board
What's
seat.
the answer?
You'd be terrific as a
can't
Federal
find it
Reserve.
in this press
As
release.
the Federal Reserve governor. Look, the GDP report today was fine. The GDP deflator was 2% on target. No problem there. The last 5 months, the CPI has been 1.8% at an annual rate, so no problem there. You know, what you have is very decent growth, low inflation. There's no reason that the target rate should be several hundred basis points above the inflation rate. There's just no reason for it.
Correct.
The Europeans, Christine Lagarde, have brought theirs down to 2%.
Wow.
The Chinese are about 2% and change.
Wow.
Why are we at 4.5%?
Well, there's
what
a
are we
little bit of
waiting
dissent,
for?
right?
So he just said China's at 2%. China, y'all, is at 2%. How are they at 2% and we're at 4.5%? It didn't make any sense. It doesn't make any fiscal sense. It's not mathing to me. Am I tripping? Am I off base? Hold your partner accountable. Comment below. Am I tripping? But is the Federal Reserve Chairman and the board being political in this decision making? Keep it going.
There's a little dissent in the mix right here. So what is it? Is there a little bit of maybe not wanting to bow to Trump in the mixture as well?
No, well, I don't want to read too much politics into it. Okay. I mean, Michelle Bowman, who was the vice chair for supervision, is a very accomplished economist. Chris Waller, who was a board member, he was the research advisor at the St. Louis Fed, taught economics at the Notre Dame University for a long time. So they're very accomplished economists. And I don't want to read, I'm just trying to figure out whether it doesn't look like they've changed much, but it's hard to know to do this on the fly. They do lead this. Although swings in net exports, read tariffs, continue to affect the data, recent indicators suggest that the growth of economic activity has moderated. Yeah. That is true, by the way. The unemployment low, labor market conditions, maximum unemployment.
And this next sentence is, inflation remains somewhat elevated. And let me ask you about that.
That's kind of hard case to make.
That's a hard case. So what was it back when it was 9.1% in 2022 under Biden? Or what was it even when it was on the way up and they were ignoring it? We're sub 3% inflation, right?
When they had the jumbo rate cut 50 basis points just before the election in September of 2024, the inflation rate was 3+.
Yep.
Now it's in the 2s. It's in the low 2s.
Actually, no, Larry, you're wrong on that, brother. The inflation rate was actually, brother. You got it right here, brother. We gotta make sure you keep them honest, right? I don't think Larry's trying to be dishonest. Actually, that inflation rate, guys, was 2.4% in September. It wasn't 3. It was at 2.4, Larry. It's at 3. It was at 2.4, not 3, brother.
Go back.
So maybe he's just holding firm at 2%.
I mean, the guy's running that Taj Mahal construction operation over there. Yeah. They're losing $100 million a year.
My issue is in November of 2024, right before the election, the inflation rate was 2.7%. He made a 1/4 point cut. The inflation rate is the exact same. It's the exact same. The exact same. Now, today, no cut. And if you look at the rates as of this year coming from April, May, and June, right? 2.3%. It should have been cut. May, 2.4%. Should have been cut. Why? Not based on what I'm saying, based on what you did in 2024. In June 2025, 2.7%. Should have been a cut. July should have been another cut. Why? Not based on what I'm saying, what you did in 2024. That's what I'm saying. Numbers, facts. What is he reading? What is he reading? Now, let's go over to someone else now. Let's go over to what a little bit of, let me go to Kevin O'Leary. Let's go to Kevin O'Leary, Shark Tank investor, right? Real world person. He's real world. I want to bring him in real quickly, right? And let's see what he has to say about it. I like Kevin O'Leary. Kevin's fairly balanced in what he's saying. Makes sense. And one thing I like about him, again, real world information. He's not theory. It's real world facts. Let's get into it.
O'Leary Ventures. Kevin, great to have you with us this afternoon. Your reaction to this back and forth and the Fed's decision. We know there were two Fed governors who were quite outspoken in their desire that rates should be cut. They both came in since the Trump administration. Where are we here?
Well, that's not enough, and rates are being held steady. And frankly, as an investor, for the rest of this calendar year, I'm investing as if there'll be no rate cuts, no increases in rates, but no rate cuts.
Not even September, you're planning?
No, I don't think that's going to happen. And I think the reason is that the Fed is, remember, every administration bashes the Fed. Whoever you are when you're president, you always bash the Fed. That's in the playbook. You always bash the Fed. And the Fed is used to getting bashed. They have callus on their fingers like guitar players because they get bashed every day. And I mean, they don't care because they know their mandate is one of independence, and the markets, the global markets, want that. So that is the background. That's the 30,000 feet. All of the rest of this, and I completely understand what the president's doing, and as he should. Every president does that. You can go back 40 administrations. Fed bashing, you learn that in Presidential Politics 101. Yeah, so I ignore it. It's just a show. And most investors are the same way. Here's the problem. Right now, you've got a lot of people assuming based on these great numbers, and I will say they've been great. I love GDP. I like wages. I like inflation. I like it all. And that keeps me pretty happy as an investor. And I might add, sovereign wealth continues to pour in. And part of that is because we have an independent Fed where more than 50% of every dollar on earth. However, having said all that, if I'm the Fed, I'm saying to myself, while the president works out the small nuances of all of these trade deals, which is going to take a lot longer than next Monday, particularly the China deal, why don't I sit on my hands and see if inflation creeps back in or not? Okay. Because right now, it looks like 15%. The hallmark deal is the European deal. The reciprocal is there 15%, which, by the way, the reason I say it's reciprocal is they have VAT taxes, value-added taxes, consumer taxes over in Europe. Yes. Remember, 26 different countries have these, around 13 to 15%. Correct. So we're whacking them with the same over here. Okay, that makes sense to me as an investor, and the market's moving on, pretty happy with that. But Canada's sitting at 35, Mexico's at 35. We don't know what's going to happen with the rest of these countries. The Fed is going to wait and see.
All right, Kevin O'Leary, thank you very much.
Now, I'll say this here. What Kevin O'Leary's approach, what he just said, love what he just said, makes total sense. What he's saying is, hey, the Federal Reserve is like, hey guys, we're going to see what's going to happen with these tariffs, and just in case inflation creeps back up, let's go ahead and sit on our hands. And I agree with you concerning, hey, because of that's a different perspective because of what's going on, a variable that we cannot control, right? Let's go ahead and just unchange stuff right now, just in case something actually happens. I agree. I can see that. But another approach could also be, hey, we see it's working so far. We're going to give a 1/4 point cut now. Now, if it begins to creep up, we can come back and raise back up again, right? You can do both of them at the exact same time, if that makes some sense, guys. But I agree with Kevin. What he said makes total sense with that approach. Different approach, different facts, same results, wisdom. Love that. Now, guys, let's bring in we still on the conservative and independent side. We're going to bring in, but it's going to be kind of a splash of the liberal side, because you're going to hear some language here in a second of the liberal side talking about the trade deals and tariffs, and then you're going to hear them respond to what's going on currently, right? So let's bring it in real quickly. Let's see what they have to say about this. Then we're going to respond to that, guys. Interesting how you begin to see theory versus practicality. Theory versus practicality. Here we go.
And sixth trade deal that Trump's brokered. Deals that were supposed to bankrupt us, according to the Panicans.
This is not Liberation Day, it's Recession Day.
Tariffs that, as I predicted, are clearly inviting a recession.
No one wins a trade war. That's just, we know that.
The Chinese are in a much stronger position.
We're increasing inflation because the prices are higher because of the tariffs.
They screwed it up, and they did it a totally ill-advised way. And I was very let down as someone who really, truly believes that free trade is awful for the American working person. This is what they came up with. Geez, come on, have some gumption, have some math.
They said no one ever wins a trade war. Well, we just did. And Jim Cramer, CNBC's Panicking-in-Chief, is dropping F-bombs because the economy is so strong.
Our biggest problem is we have so much growth that the Fed won't cut.
What the
Jesus Christ.
Oh my
God. I'm so sorry. I'm so sorry. I take it right back.
Everybody,
I take it right
okay.
back. Honestly, God, the economy's fabulous.
And it's not just CNBC.
So the same individual that said that the trade deals were horrible and free trade is not working for the American worker is now saying that, hey, the economy is rocking. It's fabulous. Again, theory versus practicality. Another way you can say is theory versus practice. That's why I love Kevin O'Leary's response. It made total sense of what he said. Total sense. Love what he said. Now, let's go to the liberal side, right? To the liberal side, right? Let's go there. And let's see here. Let's go to the liberal side real quickly. And what I want to do is with the liberal side, I want to bring in, there was a little bit of a debate, right? Between an economist that came out and said some stuff about the economy, and then your old boy Scott Jennings. Scott Jennings, man, I got to give it to him. Scott Jennings is he's a debate master. That's what he is. He's on CNN. He's always, he's right there in the thick of things at all times. This guy is, I love him to death of how he debates with facts and figures. This gentleman right here made some comments concerning what's going to happen with the economy with these trade deals and the tariffs. And to be honest with you, Scott Jennings just takes him to the house. But here we go. Let's get it in.
Well, I would just like to go, but I'd like to build a DeLorean and go back to April when everybody here was predicting likely to cause a recession. Investment stops and a recession happens. They're not talking about a U.S. recession. They're talking about a global recession.
What was happening in April,
Lead to recession. Eventually, there being a reception.
Very cleverly. If he's chosen to pick my words, just a second,
You called the recession. You called it. You took your shoe off.
And Joe, would you like to see that again?
You took your shoe off. You brought cookies out here.
15%.
You took your shoe off and you said there was going to be a recession.
Listen, Scott,
GDP is 3%.
It's too early to give a final verdict.
All right, Scott,
It's too early. Just a second, Abby. He's basically called.
So for someone that's too early to get a final verdict, I understand what he's saying, but player, you gotta own it, bro. Like, we just saw you say this on camera, big dog, on CNN. Own it, and then you come back and say, "Hey, it's too early to have a final verdict." Which I agree with that. I agree with that.
Calling me out here. It's too early to give a final verdict on the tariffs. You may wish to, but at the moment, it can't be said what the long-term effect is going to be.
I am just a journalist, and all I can do is read the economic data.
It's a bit of a stretch.
3% GDP, trade deals, record high in the stock market.
Come on, these trade deals are garbage.
It's actually much simpler.
Garbage? Yes.
Oh.
My man said the trade deals are garbage. Based on what facts, big dog? So it seems to be that this gentleman that said that we're going to go into recession got called to the carpet by Scott Jennings with his own words, right? Then he came back, did own it, and he said that, hey, it's too early to tell to get a final verdict. Now this Bama is saying that the trade deals are trash. So you mean to tell me, brother, that the deals we had in place were better than the ones we have right now? Based on what logic? Again, theory versus practicality, real world experience. Theory, this Bama, right? And then you have real world individuals like Kevin O'Leary, Scott Jennings, other people, other investors that look at what's going on. That's why I don't like economists, because these economists, all they do is theorize. All they do is theorize, and most of them have no real world experience. These guys get paid to tell you what they think is going to happen, and it's all an assumption. So let's get it in.
A second. It's much simpler than this. Just one second, because I think it's super important to understand. Scott, what was happening in April of this year, 2025? What was happening then? What did the president announce on that week, the first week of April? What did he announce?
The president was implementing
his
Scott? Tariff agenda.
And what were those tariff levels?
Well, they were different for different countries.
Okay, so
but every single person predicted calamity. Calamity.
Scott, you can't skip steps here.
And there is none.
What were those tariff levels?
They were different. He had a chart for different
countries. Just different. They were 2 to 3 times higher than the current tariff levels. Did those tariffs go into place, Scott?
Who can? Okay. This question is the dumbest question I've ever heard in my life. Great, there were 2 or 3% higher. What did it do to the economy? Again, theory versus facts, practicality, real world experience. You're sitting on display. Let's see how they unpack this one.
It's different for every country.
Scott,
it's different for every country.
It's a simple question. Did those tariffs go into place?
He has delayed some of the tariffs.
Yes or no?
He has delayed some of the tariffs, and he's made deals, and he's implemented others.
Did any of the tariff levels that Trump announced on that week, did they ever go into place?
Some tariffs have been implemented, some have been delayed, and some deals have been
implemented. The answer is they did not. They did
not.
Tariffs
have been
and all of those,
some tariffs have been implemented.
All of those quotes.
That's why we have all this money coming in.
We have them here.
Even you said it.
You're playing with numbers here.
We have them here.
No, back in April.
You guys are so mad. Why are you rooting for failure? Why does this table root for failure?
Please, because you are saying that you are taking a number of 40, 50, 60% back in April, and you're comparing it to a number of 10, 15% now.
Fine, but it's a strategy to negotiate and create leverage,
Scott,
and give us the situation
it is completely okay. Jerome, I will let you talk, but I just have to say, completely disingenuous to suggest.
I'm sorry.
You
were the one calling for a recession in April, not me.
Give me 1 second.
You called for it.
Give me 1 second. Please let me finish. It is completely disingenuous to suggest that what economists said would happen if Trump imposed 50 and 60%. Oh, let's jump all the way up to 135% level tariffs on this economy would have been a recession. Those levels never happened, which is why there has been no recession.
You sound
disappointed. So it's not that complicated.
Again, why did it not happen? Scott said it perfectly. He had the threat of tariffs in some cases to create leverage to renegotiate deals, dumbass. And then some did get implemented, which created even more leverage for negotiating, dumbass. Again, you have people that are that exist in theory versus real world experience, practicality. You're seeing on display. These are dumbass people. Dumb people. Well, the reason why there was no inflation is because of the tariffs that go into effect. What are you talking about? Some did go into effect, and some did not go into effect because of the threat of them, right, was force the opposing side to come to the table and renegotiate a better deal for America. I am thoroughly confused on why these dumbass people are mad. I am confused unless the only thing that really is important to you is a political win. Just to win the political point. Trash. Dumbass people. I can't stand economists. Can't stand them. All they do is theorize. And when their asses is wrong, they don't admit that they're wrong. They say, well, you can't really say that right now because there's not a definite time frame yet. This is trash. Stop listening to economists. They're dumb. And they get paid to sell to you. The economists, in my opinion, are paid salesmen. That's what they are. You're paid to theorize. That's all you do. No real experience. You ain't built no damn business. You ain't paid no payroll. You ain't hired no attorneys. You ain't hired no CPA. You don't know nothing about running no business at all, but you're giving economic advice for the nation based on a damn book and your theory. It's trash. Fire their asses and get some real people up in there that actually have real world experience to tell you exactly what's going on. Stop lying to people and tell people the truth. Jeez, dumbass people. Just say you was wrong. Hey, you know what? I was wrong here, but I'm still looking to see how this is going to pan out. Okay, I'll rock it with you. Okay, well, okay, that makes some sense. But when you come up here and say, out of your damn mouth, this Bama here talking about, hey, there's no definite things yet, so we can't really definitely say that. Man, sit your dumb ass down. And if you listen to this dumbass man again, you dumb too. Can't stand dumb people, man. I can't stand it. I just can't stand it, y'all. Come on, man. Being sold to a bunch of, I'm sorry, y'all. Forgive me for going off a little bit, y'all. It's just, I just can't stand dumb people, man. I can't stand them at all. Now, that was the liberal side, guys. The liberal side. Now, okay, okay. Here's my take on the entire thing. The real reason the feds are behind the Fed's decision to do this. Number one, I believe this is political, 1,000%. The Fed and a lot of the board members do not like Donald Trump. Don't like him. And a lot of them, at least two of them, I would say, the Fed chairman and there's another board of governors, their tenure ends next year, right? I think a Fed board of governors tenure is 14 years, right? And then I think the Fed chairman, I think it's 6 years. I'm gonna be wrong, guys. 6 years, I believe, is his term. Well, one of the board members, right? They leave, I believe, in February of 2026, and then the Fed chairman leaves in May of 2026. So to be honest with you, there's no incentive for them to do anything. They finna go, right? Finna go. Number two. In their minds, I believe they believe, and maybe even hoping, that some of this tariff play will result in inflation. Key thing I said there was believe. They want to believe this. They want to, right? Number three, a lot of them don't understand real world business, to be honest with you. This is my opinion. LaDale's opinion. I don't know any of them personally. I do not know. Respectfully, right? I believe that, right? But I believe a line share is political. It is political to me. It's very clear to see when you actually have the same inflation rates in 2025 that you had at the end of 2024 in September and November, and you cut rates, right? And the economy is better now than it was back then. What reason do you have not to cut the rates unless you just point to tariffs? You hide behind that. This is all political by the Fed chairman. You could tell that him and Donald Trump, when he and Trump was at the front of the Fed, it was tension there. It was clear. It was clear. And I'm not going to get into the renovation thing. No, is what it is. Does the president have the authority to fire the Fed chairman? No, not at all. Nope. Or any board members? None. He has the power to appoint, not to fire. No. This is the reason why. Now, the only way he can be removed is if there was a crime committed by a board of governor or the Fed chairman or vice chair. If there is a crime that can be proven in the court of law, they can be removed. Hence the reason why you have Representative Paulina, right? From a PR standpoint, trying to file with the DOJ, hey, the Fed chairman committed perjury under oath. I don't think that happened. No, it happened. But they're trying to create a probable cause for the investigation so that someone can make the determination if he has committed fraud or not, committed perjury or not. This is just a PR stunt. That's all. It's just a PR stunt. Is to put the pressure on Powell. Now, what is the pressure that he wants on Powell for Powell to just resign? Now, does that make sense? The real reason why the Fed did not lower the rates is because two things. Number one, I don't like Trump. And number two, I really believe that they don't like tariffs. Don't like tariffs. In their mind, they believe tariffs is going to be inflationary. When? They don't know. They just hope it happens. It's kind of like a wish. In case it happens, you'd be ready for it. You can actually cut. You can actually cut a quarter or half a point. And if inflation goes up, you just go back and raise it back up. How is it that I can figure this out and y'all can't unless you don't want to figure it out? That's the reason why. That's right. This is the reason why. Now, guys, really quickly. Now, guys, what is Trump's counter move? He has two. He has two counter moves, right? He has two. One is cryptocurrency banking strategy. Before I go to that one, that's the most exciting one. Let's dive into number one. Pay close attention and get your pens and pads out. This one is going to be good. Let's bring in the sitting Secretary of Treasury, right? Scott Percent, I like him a lot. And let's hear him talk about the...
It's not unusual to see an appointment announced, I don't know, well before then. Do you have any idea on when we might hear what the president is thinking in terms of Chair Powell's replacement?
I do. I'm going to be...
Can you tell us?
I'm going to be... sure, Joe, if you could just lean forward, I'll tell you a little.
It's Connie Chung, whispered in my ear. Yeah,
so,
that's right.
We are putting together a very good list of candidates. And remember, there are going to be two seats opening up. Governor Kugler will be leaving in, I can't remember whether it's January, February, Chair Powell in May. So there will be two seats opening up. I'm putting together a list for President, Chief of Staff to review. We'll be interviewing people. So I would expect that we could have an announcement by the end of the year.
So now, why did I play that before, guys? Why did I play that before? Well, let me tell you why I played that before. They do have a list of people that they have been looking into, and Scott is one of those guys. Scott is, I believe, he's going to stay at the Treasury, right? So Scott ain't going nowhere at all. He's going to be right there. Scott is having a good little time being in the Treasury. There's some other people that he actually has in mind that could be the Fed chairman, right? And also a board governor. Now, What is Trump's plan here from the PR standpoint? Remember, Trump loves to control narratives. This is the reason why he had the #1 show for years called The Apprentice on NBC. He can control the narrative, right? So he loves narratives, specifically because in his first term, right, that got taken away from him a lot by the media. So Trump loves to control the narrative. So he ramps up the pressure on Powell and them and the Fed government. So much so, you actually had 2 board members, which he appointed. Trump did, right? He appointed them. And what happened was when he appointed these, not when he appointed this, is these 2 that he appointed descended against the Fed Chairman Powell's decision and other board members. First time since 1993. Now, hypothetically, what if, hypothetically, the Fed chairman, vice chair, and the board of governors, because of the political pressure via the media, this would probably never happen, but hypothetically, walk with me, they begin to resign. And Trump's able to appoint more than half of the board members, the vice chair, and the chair. Be the first time in history that a sitting president would have had control politically from a monetary standpoint of the Fed. That's what he would really love, is to control the Fed. Kind of like the conservative actually have a 6-3 leaning in the Supreme Court. That's up for debate. But what if he actually had the exact same thing in some form or fashion at the Fed? Do you see why the PR was so big? He was trying to. If he would have got the Fed, the Fed chair to retire or to step down, I believe more would have stepped down. More would have. Real talk. They would have. That was what I think that's what he really wanted. This is my opinion. LaDale's opinion. I don't know. I have no facts. Mr. LaDale's opinion. I believe that Trump was trying to use the PR, the bullet pulpit, to pressure the Fed chairman and that board member that whose term is ending in February to step down, which I believe would have caused a tsunami of resignations, and it would have also caused a tsunami of appointments by Trump. I believe that's what his real plan there was, to begin with the Fed chairman and one of the board members, and then the domino effect. Right. Number 2, this is the funnest one for me, guys. Cryptocurrency. Remember, guys. Remember. The Fed chairman does not want to raise the rates at all. Now, if you want to go a little bit deeper on what I'm going to go through in a second, from the beginning, go to a previous Kind of Move podcast, right? Just go to my YouTube page or whatever it's at right there. Scroll down. You'll see it. One talking specifically about cryptocurrency, right? On how Trump is trying to change the financial system, right? Go listen to that one after this Kind of Move podcast. You can get the top picture. This is after the Genius Act has been signed. And stablecoin actually has been signed. All right. So Trump's whole play is to redesign or rework the financial system, right? And basically mirror the Federal Reserve that pushes fiat currency to the system with Bitcoin and stablecoin flowing that through the bank system as well at the exact same time. His goal was to expand the money supply without expanding the money supply. That's what he wanted to do. Cryptocurrency gave him that plate. If you don't believe me, watch this. Let's bring in our partner, Mark Moss. I'm sorry. And when it comes to crypto, he is the man. Man, go subscribe to his YouTube page. You'll learn a lot for this man. He actively invests in cryptocurrency as a venture capitalist. So this ain't no slouch, right? And it's free content. Go get it. Here we go.
Trump just signed a $3.7 trillion stablecoin plan that literally depends on Bitcoin exploding higher.
Stop right there. $3.7 trillion plan. Again, expanding the money supply without expanding the money supply, which won't cause any inflation. Let's keep it going.
But here's what nobody's telling you. This isn't hopeful speculation. This is a mathematical reason why the government now needs Bitcoin to hit prices that sound impossible today. Now, if you don't understand this connection, you're going to miss the biggest wealth transfer in Bitcoin's history. Because when the Treasury Secretary publicly projects these numbers, it's not a prediction. That's policy. I've been building and selling tech companies for decades. I'm a partner at a leading Bitcoin venture fund, an officer of a publicly traded Bitcoin company, and this is the same strategies, the same intelligence that we use internally, and now you can too. So let's go. All right, we are jumping right in, and like always, we're gonna go right to the source to hear exactly what they said, because this is the confession, all right? Like I said earlier, this is not a prediction by these guys, it's policy.
Correct.
They're the ones that determine the future outcomes. We go listen to what they say, and I'm not here to give you the news. You can go watch it on your own. I'm here to tell you what this all means. Okay, so the confessions, first of all, we wanna listen to Scott Bessent. Why? Well, he's the head of the U.S. Treasury. He's the person that's responsible to sell the U.S. debt to the world. That's his job.
Wow.
Sell the debt.
So you hear that?
He knows something about the policy. Well, let's go ahead and just listen to a video clip of him right off the bat, and let's hear exactly what he has to say, and I'll break it down. Roll the clip.
There is the growth, the potential growth of the debt, but what's more important is that we grow the economy faster. So what we've seen under the past 4 years, and what we inherited, I inherited 6.7% deficit to GDP, which was the highest deficit when we were not at war, not in a recession. So we've been trying to bring down the spending, and we are going to grow the revenue side. So we are going to grow the GDP faster than the debt grows, and that will stabilize the debt to GDP, which even Secretary Yellen and I agree is the most important number.
All right, so you heard it directly from Bessent himself. So we have a problem. We have debt and we have GDP.
Yes.
It's a ratio. So we have debt growing super fast, and so the debt to GDP is going too high. Problematic. Now, originally they thought maybe they could bring the debt part down. Doesn't seem like it's likely. So now we must move the GDP up. That's what he's talking about when we're saying grow our way out of this. All right. What about Musk? Elon Musk, you remember, he joined the Trump administration, fired up. He started Doge, and he's going to save $1 trillion out of the budget. You remember all of that. So he was super fired up. Well, he tried. He got attacked. People hated him for it, and he quit. And when he quit, he tweeted. He said right here, I have come to the perhaps obvious conclusion. So I've quit. I should have known this all along. I was naive. I thought I could change the world. But the obvious conclusion is that accelerating GDP growth is essential.
Correct.
Saying the same thing. We can't reduce the deficit. We can't reduce the debt. We can't reduce our spending. The only hope we have is growth, to grow our way out of it. You hear they're saying the same thing. The people inside the government have decided there is no austerity, there is no budget, there is no cutting.
You see that?
And now the only way forward is much, much higher. Okay.
Again, guys, this is called modern monetary theory, but through Bitcoin. They're going to basically inflate the debt away by trying to outgrow the economy, outgrow for so much growth that it inflates it away. But does it? Because if you're using Bitcoin, it's not causing any inflation. So that's why they're saying grow the economy faster. This is a different version of MMT, modern monetary theory. And it's kind of unique. Let's get to it.
Now, what does that mean? Well, there's a lot. I'm going to break it down for you. Number one, Musk says only radical improvements in productivity can save our country. Why is that? Well, in order to grow GDP, they're going to have to let inflation. Let the money printer run hot. The problem is when the money supply expands faster than productivity, we get inflation. So we need productivity to accelerate. Also, one thing Musk talks about is the problem with aging demographics, declining population. That's a whole other topic. But we need radical productivity. Of course, that's what Trump is working on. All right. Now, again, these are confessions of the playbook. They're telling us what is coming next. They're telegraphing this. We just have to understand this so we can position ourselves accordingly. The U.S. government is trapped in a debt spiral. All right. The debt spiral is that, again, the debt is growing faster than the productivity. Here we have a chart. This is from the government itself, and it's showing where the debt to GDP ratio is and where it's projected to end up, depending on what happens with certain scenarios. So this is 156% debt to GDP. This is much higher. We don't know. This is about 200% debt to GDP. Houston, we got a problem.
Yes,
we got to figure this out. And so understanding that we're in that debt problem, the only way to escape it is with inflation, which is a bad word. It's a dirty word. You certainly don't want that inflation. So what are we going to do about that? Well, let's take a look.
Watch.
Okay, the warning that nobody's paying attention to. Now, the warning came from the BIS. The BIS is the Bank of International Settlements. This is the central bank of the central banks.
Right.
When they make warnings, sometimes you might want to.
I did a kind of a podcast on the BIS. Go to my YouTube page or whatever you're watching this on, right? Rumble as well. And watch it to understand these terms. This is very important, guys, when it comes to this, right? One theory was inflating the debt away through MMT. Trump is trying to do something a little bit different when it comes to cryptocurrency. Outgrow inflation. Outgrow inflation through the mechanism of Bitcoin and stablecoin, cryptocurrency. Here we go.
Pay attention. No, maybe we don't listen to everything they say, but when they've made other warnings, like, for example, before 2008, they knew what they were talking about. So what did they say? Well, they put out the message, again, the warning, and it said right here that the problem is the relentless rise in debt. Governments need to curb the relentless rise in debt. They said governments have a narrow window. Like, if you don't get this fixed right now, serious problem. Governments have a narrow window to put their fiscal house in order, bring the fiscal spending down, or get that under control somehow. The BIS says fiscal dominance could lead to rising inflation.
Correct.
Duh. When the governments keep increasing the debt and spending the money in the economy, it's gonna lead to more inflation, obviously. Okay. Now we know that all the charts are screaming the same thing. Okay, so we heard from the BIS. That's their take, that's their opinion. But let's go look at the data ourselves. I like to look at the data. Here we have a tweet here from Luke Grauman. He says the market has downgraded U.S. debt to like emerging market status. So the U.S. used to have the best credit in the world because, of course, we have the money printer, we can print dollars. Emerging markets are like Peru or Turkey or Lebanon, right? And so now they've downgraded U.S. debt to that level. And it says here that higher real rates are mathematically certain to push the sovereign into a debt spiral. What does that mean? That means if the government is paying positive rates, right? So what they're doing is they're paying negative real rates. And what we can see is real rates versus gold. Real rates are going down, why gold is going higher. That's the data. What does that mean? Let me show you a couple more charts to start making sense. This is gold priced in U.S. Treasuries. All right, so everything's a trade. So we're pricing GLD in TLT. And what does this show us? Since about 2015, look at the price of gold as compared to U.S. Treasuries. They're plunging, gold is going higher, okay? Well, inflation. What about Bitcoin? Same thing. Bitcoin and U.S. Treasuries is showing us the same thing. Since about, since Bitcoin has basically come out, and it's been basically a straight line up. And again, we can see the markets, the charts, they're screaming the exact same thing. There is a debt crisis that can't be solved.
Correct.
The only way to solve this problem is massive amounts of more debt and massive amounts of more printing to the point at which holding those assets will only lose money. So everyone's jumping ship. We can see that gold is gaining confidence and also investors are gaining confidence in Bitcoin. Okay, now the BIS didn't tell you that there's a plan. That's what Besant, that's what Trump, that's what Musk, that's what they're telling us. Again, this is not a prediction, there's a policy. So don't worry, there's a plan. And if you know what the plan is, then you can just position accordingly.
Here we go.
Okay, what are we talking about? So we have the Genius Act. Okay, if you've been paying attention, you don't have to be a genius. You saw it, right? I know, corny joke. Okay, the Genius Act is a bill that just got signed in. Trump just signed it. And it's basically what the media is portraying to be is a stablecoin bill.
Yes.
So this gives us clear guidance on what stablecoin regulation could be, as if we need that, because stablecoins have been around for a long time. In America, the land of the free, we're free to do things. Laws tell us what we cannot do. So overall, I'm not super happy with this bill because it sort of gives us guidance as if we needed the government to tell us it's okay to do something. All right, let's put that aside. So basically, the Genius Act, again, everyone's looking at as stablecoin regulation. I think there's something else to it.
Yes.
It's not really what it appears to be at the surface level. And you have to sort of understand the entire picture to start picking this apart, as well as look at some of the other executive orders that Trump has put into place. I've covered them in other videos. What am I talking about? Well, again, beneath the surface, there appears to be more. Going back to Luke Grauman, one of my favorite analysts to follow, you should definitely check him out. We'll link to his Twitter feed and his newsletter down below. It's worth checking out. So what Luke Grauman says here regarding this Genius Act is that now the government could turn $3.5 trillion, not a small amount, $3.5 trillion in sterilized reserves into digital, spendable cash. I'm going to tell you what that means in a second. And they could circumvent the Fed. So if you've been paying attention, Trump has been fighting with Jerome Powell, the chair of the Federal Reserve. He's calling him too late, right? He's calling him always behind. He's trying to basically get him to resign. He won't.
Listen to your boy. That's what I was saying for weeks. Listen to your boy. We almost done, y'all.
Drumming up these charges that they're, mismanaging a renovation at the Fed. Maybe they can get him out over that. Either way, whether Trump gets him out, whether Trump elects somebody else to sort of circumvent what he's doing, or we wait until he has to resign next year and Trump replaces him anyway. So either way, this is a way for the Trump administration to sort of get around or bypass what Jerome Powell and the Fed is doing. Now, this is a way that they could help finance a great strategic competition that the U.S. is presently losing badly. That's per Luke Grauman. Okay. So what we're talking about is we need to allow G, growth, to grow up much faster and repress bondholders, meaning the bondholders, the people that are holding the government debt, holding the bag, they get repressed, meaning they don't make enough money for the amount of inflation that we're having.
Yes.
I put down here, this guy says, yeah, but why would that happen? The government's not going to do anything like that. And Luke says, you're assuming the U.S. government is doing anything over the past decade to actually help consumers.
Yes.
I disagree. So they're not helping the consumers. They're trying to help themselves is what Luke says. In his opinion, this is about ramping up growth and receipts. Again, putting the money in the system. What money? The $3.5 trillion in sterilized reserves. I'm going to break that down in a second.
How do you
putting
do
that $3.5 trillion in? Why?
Yes.
To ramp up the spending, ramp up the growth and receipts, and financial repression for the government, holding those bondholders or the bag holders down. So what are we talking about? We're talking about sterilized reserves. What we're talking about is that the Federal Reserve has given the banks a bunch of money. But they don't want the money to get into the economy because it would cause massive inflation. If you dump all this money into the economy and people go start spending it on vacations and trips and cars and going out to eat and things like that, the prices will rise. So what they've done is they pay the banks to leave it there, keep it out of circulation. That's why it's called sterilized. All right, and so they pay the banks to hold it there, and you can see that the amount of money sitting there was flat until the 2008 Great Financial Crash. And since that time, it has completely ballooned to about $3.5 trillion today. It's just sitting there. That could just go into the economy. It could buy U.S. Treasuries, Bessent's main job. But instead, it's sitting there. And what if the Treasury Secretary could get them to buy treasuries? What if the Trump administration could get that money back into the economy and we could see inflation to start growing our way out of this?
Told you.
Are you starting to see the picture? Now you might be asking, well, if we got the $3.5 trillion of reserves out, and that's digital spendable cash that gets right into the ecosystem, not like traditional quantitative easing, because quantitative easing gave money to the banks. That's why it's sitting there. We give it to the public. But you might say, but Mark, isn't that highly inflationary?
Listen.
Well, you'd be right. So what do we have to think about that? I'm going to answer that for you, but first let's just think about this $3.5 trillion secret for just a second. because of how sneaky this is. Because again, as I said, it bypasses what the Federal Reserve can do. It bypasses them completely, kind of cuts them out.
Wow.
It takes those sterilized reserves and could push them into be circulating money.
Correct.
We take the traditional quantitative easing that gave money to the banks but never made it to the public. We take that and we use that to create the inflation. And it's the stable coin that enables all of that. How is that? How is it happening? Well, stable coins can turn dead money into digital cash. So remember, the $3.5 trillion is sitting there because it can't be spent into the economy, right?
Exactly.
So the Fed pays them what's called interest on reserves, IOR, to sit there. They make about 4.5%, 5%. But what if the banks could now issue stable coins for the reserves they had? What? They still have the dollars. The tokens now become claims to the dollar they have.
Yes.
And potentially those dollars they have could still be earning interest.
Yes.
And they have the stable coins out there
Wow.
at the same time. Proverbially having your cake and eating at the same time,
Yes.
if you will. But while we see this, again, they're telling us this, they're projecting this, they're giving us the policy. We can see Scott Bessent right here. Again, put this on X. Amazing what we have today where the President of the United States or the Secretary of Treasury are literally like putting content, putting out messaging directly to you and I with no middleman. Pretty amazing. So here on X, he said that recent reporting projects that stable coins could grow into a $3.7 trillion market by the end of the decade. 3.7. Not too far off from the amount of sterilized reserves, are there?
Right.
A thriving stablecoin ecosystem will drive demand from the private sector for U.S. Treasuries, which back stablecoins. So he's trying to sell Treasuries. He would love it if everybody in the world would buy Treasuries. Not just banks, institutions, but everybody by buying stablecoins. The stablecoin companies then buy the Treasuries.
Right.
All right, so this is exactly what the plan is. This is the policy they're telling us all over. But what didn't he say publicly? What is missing from this? Well, what they're not telling you directly, again, there's a plan, is that this inflation is a trap. Or I should say the trap is the inflation. Because if they take some of that money or all of that money and dump it into the public, it's going to push asset prices higher. If you take $3.5 trillion of new money and you put it into circulation, everyone goes out and starts buying things and traveling and buying and shopping and Amazon and whatever, all those things. This is why Musk, again, going back to him, said there must be, to match that, there must be a radical improvement in productivity. If not, the inflation is going to rage. So that's the dilemma.
Yes.
The dilemma is that we need to increase efficiency, but the problem is we can't do it right away. Here's going back to Musk on that same Twitter thread I referenced earlier, where he said the only way is to grow our way out of it. Down here, they said, well, how soon can humanoid robots have an actual effect on GDP of any country? How long is that going to take? Because, of course, he's working on robotics. And he says 4 to 5 years. Okay. So the problem is we need this money in the economy right now.
Yes, we do.
Like right now. But the problem is if we do that, we're going to have massive
inflation
unless we get the efficiency up. But we can't really get the efficiency up for 4 to 5 years to rebuild supply chains and build the automation and get the robots. So what do we do in the meantime? Because if inflation starts raging higher, home prices go up and stock prices go up and all the costs of goods and services go up, people are going to be unhappy. Going to have another election. It's not going to work really good. So we need growth now, but we don't want the inflation. That's the dilemma. We need an escape valve. Where could this release valve, where could all that inflation go, so all that growth go where it doesn't affect prices? We need it to absorb trillions, but where could that valve go? Where could it absorb trillions, but without competing for goods and services? Because when we compete for goods and services, it drives the price up.
Correct.
You're starting to see the problem. Well, here we go. All right, the escape valve theory. So again, financial repression. This is not a new concept, all right? The IMF has written a white paper on this exact concept.
Wow.
They've done it in the 40s. They're doing it again and again. So you buy the debt, use the stablecoin buys the debt, whatever, and then we pay below market yields, and we let inflation run hot, and we steal the middle. We inflate away the middle. This is negative yields, okay? That's the escape valve. And then we need assets to go way higher. So even though this inflation is going higher, and even though all the costs of your goods and services go higher, you feel okay about it because your house went up in value and your retirement account went up in value. So the assets go higher and you don't feel as poor. Sure, I mean, gas is $6 a gallon, but like, look at the price of my house, right? So they tell us the plan. Inflate the debt away, pump asset prices higher, and then gaslight anyone who complains about it.
Mm-hmm.
But again, there's a better plan than even that. And this is where Bitcoin comes into play. And before you roll your eyes, stick around and watch what I'm talking about. Okay, Bitcoin acts as a liquidity sponge.
Correct.
It is the most sensitive asset to global liquidity. That means when global liquidity, when the money supply goes up, gold goes up, S&P 500 goes up, all those things, but Bitcoin goes up the most. It's 8.9 times sensitive to global liquidity versus 1.4 times with gold. All right, so it's absorbing more liquidity than anything else. Now, if Bitcoin, why Bitcoin? If Bitcoin goes from right now today about $118,000, let's say it goes up to about $500,000 per Bitcoin. What that does is that takes billions of dollars of purchasing power that would have gone into homes or would have gone into apartments or would have gone into rental properties or whatever.
A liquidity sponge.
And it puts it into Bitcoin, and it's no longer bidding those assets up.
Mm-hmm.
So now, instead of Tesla and Google and all the stocks going so much higher because all that money had to go somewhere,
Mm-hmm.
instead of all the homes going up so much higher because the money has to go somewhere,
Yeah.
now it can go into Bitcoin. That's the relief.
Oh, Jim.
And the thing with Bitcoin, it doesn't compete against consumer goods. It's not competing against homes. It's not competing against real companies like Tesla, Coca-Cola, etc. And so Bitcoin can absorb the most of that, be the release valve, and it could keep regular assets like home prices down. Now, this might seem absolutely crazy to you, and that's okay, but let me show you a couple things, because you might think I'm crazy, but let me show you a couple things. Now, Howard Lutnick is the Secretary of Commerce for the Trump administration. He's also one of the Wall Street titans, runs one of the biggest firms,
Bitcoin
Fitzgerald.
Godfather.
Now, I did a video about him recently. We'll link to it in the show notes down below. And we talked about how one man, Howard Lutnick, could 10x Bitcoin from inside the US government. And in this video, I basically laid out the web of companies that he's created around every point of Bitcoin. His company has the major share in MicroStrategy, major share in Tether, the stablecoin company.
I responded to this video on the Real Estate Friday Live and on a previous Kind of Move podcast. Just go to my YouTube page or any other platform, scroll down, you will see me talking about this. All right, it's right there. Go watch it. Get the entire picture. This may be above some people's heads. I pray that it's not. This is so good, and rewatch this again. So when we get done with this here in a second, rewatch this again so that you can put it on your brain, because he's giving doctorate information when it comes in finance. Doctorate in information. All right.
His company now, his son has taken the lead. I have that right here. So now his son has taken the lead, and he's putting billions of dollars into all the Bitcoin-related SPACs. One, a $3 billion one, and a $4 billion one, all around Bitcoin. So the Secretary of Commerce, the Wall Street hedge fund titan, who's now running policy in the U.S. government, is buying up all these Bitcoin-related companies, and his son now is taking the lead. Do you think they might know something?
Yeah.
What about the President of the United States? Just this week, we saw Donald Trump himself, DJT Media, Trump Media, which I believe he owns half of, bought $2 billion of Bitcoin. You might think I'm crazy. Why is Trump himself buying $2 billion of Bitcoin? Why is his Secretary of Commerce buying Bitcoin? Why is his son running his company buying billions and billions of dollars of Bitcoin? Maybe, just maybe, the Bitcoin release valve is something you should be paying attention to.
Mm-hmm.
Okay, now, what about the stablecoin correlation here? So stablecoins have been around for a long time.
So, guys, he goes in a little bit longer, guys. I'm going to stop it right there. But, guys, this is such good information. He gave, my God, he gave a $1 trillion worth of game. I know it's a lot of information. I know people are like, what? Some people are like, what in the world are you talking about? Hey, I know it's a lot of information, but I'm trying to tell you, rewatch that again, over and over and over again, and you'll get it. Here's a synopsis of Trump's counter move, right? This is counter move number 2, all right? Using Bitcoin as a liquidity sponge to expand the money supply, without expanding the money supply, by sucking in this $3.7 trillion worth of money there into Bitcoin, and you'll see this on the previous videos that I did on Bitcoin, not selling the Bitcoin, not creating new Bitcoin, but leveraging the Bitcoin or stable coins, creating new debt that the banks would actually create, because the government has shaken hands with cryptocurrency. It's the government is no longer anti-decentralization. They are for it, as long as they can control it. It's a brilliant plan for Trump to expand the money supply without expanding the money supply, right? And which would not cause an inflationary standpoint, because money is flowing to a liquidity response of Bitcoin and not to stocks, bonds, mutual funds, houses, things of that nature. So there's no inflationary effect. But the cash is still available for you to use to make investments. I mean, to borrow, to make investments, to buy new things, to invest in real estate, things of that nature, because the banks have more Bitcoin and stablecoin that they can allow for you to leverage. The name of the game is leverage. Creating new debt out of thin air. Because he would like for some investors to acquire what? T-bills. T-bills. But by acquiring T-bills, how it's done via the Federal Reserve would infuse that capital into the system, which will cause an inflationary event. This is the reasoning why he's talking about Bitcoin. Guys, this was so good. My God, again, run this back again and again and look up Mark Moss, M-O-S-S, Mark Moss. Subscribe to his channel. He is a Bitcoin and cryptocurrency and business mastermind. If you don't listen to anything I say at all during this entire podcast, listen to that. He'll teach you more. He'll teach you more than you know now in finance at any time. He's that good. Brilliant plan by Trump. I love it. I love it. It makes total sense, guys. Give me your thoughts, guys. Let me know what you think about it, guys. Am I tripping? Am I off? Let me know what you think about Trump's plan. It's plan number one was what he was trying to do, was trying to replace the lion's share of the Federal Reserve. That's my opinion. And number two, this cryptocurrency banking play. The big cryptocurrency banking play is already in effect. Sorry, it's already beginning already. It is. So give me your thoughts. What do you think, guys? But guys, man, real quickly, guys. Hey, if you are wanting to pick my brain, guys, on anything when it comes to real estate, business, finance, family, faith, hey, I am on the app called Minnect, guys. It's Patrick B-David's app, guys. Scan on the QR code on the screen. But if you cannot, go to the show notes on my YouTube or any other platform, guys, and schedule time to talk with me. You can text me, you can call me, you can FaceTime me, and ask me anything you want. It's pretty funny, guys. I've been asked some crazy, some good stuff. A lot of people are actually making business connections here and investing in funds and investing in projects together and collaborating, JVing. So again, guys, go over to Minnect, right? Schedule time with me if you want to talk with me. And let's wrap. All right, guys. Number two, guys. I'm always asked a lot of the times, guys, hey, LaDale, can you teach me how to invest in real estate? I always tell everybody this. In real estate, you make money when you buy, not when you sell. Selling is the icing on the cake, right? You make money when you buy, not when you sell. Now, how do you buy right? You become an expert in locating distressed properties, right? I am giving away a free ebook. It is completely free. No, nothing at all. I want to give you the information, right, that I have learned and mastered, guys, is how to locate a distressed property, whether it be a single-family residence, apartment complex, office building, warehouse, data center, hello, right, in your city, county, or state, guys, right? How to master that craft, locate those properties. Once you do that, guys, you will never be broke ever again because the deal brings the capital. Remember we said strategy, capital impact up front. This is the strategy. Locating distressed properties, which attract the what? Capital, right? And then when you actually implement your plan the right way, the impact is housing for someone in the community and revenue for you and your family. Strategy, capital, and impact, right? That is what it is. If you want to, guys, scan on the QR code right there on the screen, right there. Or what you can do is real simple, is in the link below, click on in the show notes and it'll be right there, guys, and go download the free book. It's free, damn it. It'll cost you no money at all because it'll cost you some time. All right, guys, that's it. All right. And then lastly, guys, man, every single Friday at 5 p.m., Cliff and I do something called Real Estate Friday Live, guys. We talk about all things real estate. Here's a brief preview of what we talk about. Here we go.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
I guys, every Friday at 5 p.m. CST on all platforms like this one. You can get it in with Cliff and I. We talk about it's this Real Estate Friday Live. We talk about all things real estate, guys. And we give you a strategy of what you can do today to make anywhere from 5, 10, 20 grand, guys, to change your life. We always say you are one deal away from changing your life. Just one. All right, guys. All right. This is the reason why we give away the ebook for free, because we understand how one deal can change someone's life. But guys, God bless you. You know how I get. Oh, one last thing, guys. Coming soon. We're coming out with merch, guys, called The Bag Merch is coming soon. It says almost available. It's coming soon, guys. You can see I have the hat on, guys. I have the hat on. So, guys, we're coming out with a hat, and 2 hats and 2 hoodies. That's it. We're coming out with that, guys. I'll be ready. We'll be rolling it out in a couple months. But I want to give you guys a little bit of a sneak preview of the hat right here. It's called The Bag Merch, guys. All right. Well, guys, thank you for your time. Do me a favor, guys, real quickly. If you like what you heard today, share this out and like and subscribe, guys. Click on the like button so you help our algorithm, guys, which would be great. And subscribe to the channel. Come kick it with your mans and them, y'all. Don't get. I may invite somebody on. I may invite some people in the audience on the screen with your partner. Come get it in with your mans and them, y'all. All right, guys. Well, guys, thank you so much for your time. You know I end it every single time before you leave. While you can, you see that thing, baby. Take that picture for your mom and them, and holla at your partner. God bless you, guys. See you next time, guys. All right, y'all. Peace.
Okay, so you did fixes and flips first, or were they? Now it sounds like you're more buy and hold. Okay, so you were wholesaling first. Okay,
because I was broke. I had no credit. I had no money. So I had to get some money coming in. So I learned how to do wholesale.
And you were doing wholesaling at the good time too.
2000.
When it wasn't so saturated.
I kind of saw the debacle coming. Okay, it didn't make any sense. I was like, wait a minute, how can you lend out to retail buyers 99.7%?
Yeah,
just a little bit of a down tick. It's insolvent.
And you got to remember, in some states, because I lived in Florida at the time, you could have loan to value above 100% of your property.
Right.
The first property that I bought, it was 110%. We left the bank with like $30,000.
Yes. Yeah. Yes.
It was amazing to me. I was like, why am I not doing this all the time? But then clearly 08, 09 let me know why people shouldn't have been doing that all the time.
08, 09, that's why I made that lion's share of my money.
Wow.
People were
Okay.
actually running from the cows. I was running to it.
Of course.
Because I saw it was coming.
Okay.
A lot of my business colleagues back then were buying flippers.
Yeah.
I didn't think it was wise for me to share 50% of my profit with Uncle Sam. He didn't do no work.
Okay.
So why would I give him free money?
Of course.
Okay, how can I make sure I'm still legal, but keep the lion's share of the cash flow?
Of course.
So I began studying the tax code with my accountants and CPAs, and I said, okay, I'm going to buy a whole lot of properties. Now watch this. I actually buy a lot of properties, and I take home money when I actually acquire it. Every single time.
Okay, you need to break that down just a little bit.
If you wanted to know how successful real estate investors make money with their acquired real estate and not when they sell it, click on the link below or swipe up and download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed, holla at your partner, and download the ebook today.